Ladies and gentlemen, good morning. Yeah, I don't know about putting Mr. Francis Kamulegeya on the spot, given the profile that has just been read out about him. But just to say a few things about Francis that I personally know. I know Francis to be a professional in the world of tax, an astute businessman, but most importantly, and the reason as to why we are seated here today with him at the Fireside Chat, is because of his skill in creating, in building, and also managing wealth. And we hope that with this conversation, we are able to learn a thing or two about how he has been able to do it. Ladies and gentlemen, once again, please join me in welcoming Mr. Francis Kamulegeya, the board chairperson, I&M Bank. Francis, you've had a illustrious career.
Correct.
You have had a career where you have earned, where you have invested. They've talked about your wealth within this room. And I just want to understand from your perspective, what have you learned to be the difference between simply accumulating money throughout the years and also investing money? Simply put, what would you say is the difference between saving and investing? Just to start off.
Okay, thank you, Philip, and thank you, I&M Exco team, for the introduction. You said bits and pieces about me, which actually I didn't know, and now I have to reframe my entire conversation just to manage expectations. But let me start with a disclaimer. Everything I'm going to share here, I'm sharing it based on personal experience. So in 2005, which is about 21 years ago, I was admitted as a partner in PwC. And when you become partner, you become part owner of the business. You cease to earn a salary. You start sharing in profits. I was very hardworking, used to bring in a lot of business and had great relationship with clients. And I was a very valued member of the team. And the first month I got paid, I was surprised at the amount of money that I was given. It was a lot of money compared to what I was used to earn as an employee. And from there on, I started on my journey of managing that money and investing and financial wellness. And I thought I should just give that as a background. So I understand the difference between earning, which is a lot of where the young people who are still building their career are. You earn, by the way of example, 100. If you spend 100, then you have nothing to show for what you've earned. So I used to spend less, and that allowed me to save. So you earn, you spend, don't spend everything, save. And then when you've saved, you then have enough for a bank like I&M Bank to consider you credit-worthy, and then they lend you money. So you may have saved 100, then they lend you 900, and then suddenly you have 1,000. And then that 1,000, you invest. And I went through that phase of investing for quite some time. And then when I transitioned out of full-time employment, capital preservation was very, very important for me. And that's the phase of life I'm in, which is not only preserving it, but also ensuring that it's earning passive income for me. And that has resulted in diversifying and, money markets and saving for a purpose, access to the money in terms of liquidity, while at the same time putting it aside to ensure that it's transferable. Many of us with our Gen Zs, they're not going to inherit our coffee and cattle and property. We need to think about that. Otherwise, you can end up working so hard, accumulating so much money, and you have nothing to show for it by way of transfer to the next generation. So that, in summary, is the way I've managed my financial affairs. Philip.
All right, thank you for that. I think the key thing you've mentioned there is the savings culture that you had, the fact that you were not spending everything and that you are keeping something to put back within the market. I think that's the key takeaway from what you've just shared with us, Francis. And I hope it is something that we can all take away, that saving is not really for consumption, but so that we can deploy within the market.
Exactly.
Yeah. All right. So Silas just mentioned the products that we have He mentioned the I&M Capital Income Fund, which is our UGX fund. He's mentioned the I&M Capital Wealth Fund.
Yes.
And I'm just inquiring or inquisitive, if you had 100 million, sorry, scratch that. They've described you as a very rich man. So if you had 1 billion,
okay,
with a B,
yes,
I'm just curious to understand how you would invest this money. Would you put this money in investments that have the highest return? Would it be return driven? Would you be just looking at the number and saying, yes, I want 30, 40%.
Yeah.
It doubles the money in 6 weeks. I want that one. What would you be looking at?
Okay, so if I had 1 billion, first of all, I would split it into some 4 or so units to ensure that I diversify in terms of my investment products. But before even I decide on where to put that money, I look at myself and envision my needs in the next 10, maybe 5, 10, 20 years. And I'm at a phase of life where I still continue to pay school fees and university tuition. So that's very important in terms of liquidity. A phase of life where I like traveling and I really like this multi-currency card of ours. But also it helps when you go somewhere and you have something to draw upon without having to make a call and ask whether they've sold the coffee or sell a cow so that you can have dinner in Portugal, Spain. So I am very, very interested in diversifying and having hard currency. Then the risk appetite. I would consider myself to be moderately risk, but not very high risk, because my main objective is more of preserving the wealth and the capital, while at the same time it's growing at a rate that is acceptable for me and to me to generate liquidity, while at the same time funding my lifestyle. So I would look at the local money markets. There's some really, really good products on the local markets, and you know them better than me. I'd look at hard currency to ensure that my USD, pound, euro demands, I've got some base somewhere. Most importantly, I would not put everything in one country, not even in one region, because diversification is very, very important. And then thirdly, I would ensure that I've got access to liquidity. So if for any reason I needed 200 million shillings or $30,000, I wouldn't have to worry about selling bonds. Bonds are tradable and you can easily sell them very quickly, but also you can make a loss because of the urgency with which you need the money. But I'm at a phase of life where I've gone through a process which I call decluttering. So I've got very, very little fixed assets by way of land, buildings, and most of my wealth is in money markets and tradable assets because of the profile of my children and the people that I want to transfer this wealth to, and also my various philanthropic and charitable causes. It's very difficult to sell a flat in a condominium over 14 apartments for you to raise $50,000 to go for a procedure in Turkey or Thailand. And again, we are at that age where any of those things can happen. Even if you had medical insurance, and I talk about it in my book, still insurance, and the GA people here can confirm, there is a process they go through before they authorize and approve a 30,000 medical expenditure. So you need to have access to that kind of money. And that is something that I've done for myself, and I would strongly recommend to people to do that for themselves.
All right, thank you for that. So it would not be purely driven by the return number, but what I hear there is your risk profile, your horizon in terms of time. How much time are you looking at in front? I also had you mention access to liquidity. How fast can I convert this particular investment into cash?
Correct.
To go to Italy is what I heard.
Correct, yeah. Wherever it may be. Yeah. It could be Nairobi or South Africa. Could even be here in Uganda. Okay. Yeah, but you need the cash and you need to have access to it.
To liquidity. Yeah. Okay, great. So just going back again to the products, and I want to go back to the 1 billion.
Yes, sir.
For some reason, I think you have it actually, right on you. Just to go back to the 1 billion shillings. If you had the 1 billion, I&M Capital has now launched into the market. And you came to I&M Capital and you said, look, I'm interested in your UGX income plan that you have. What are some of the things that you would be looking out from ourselves? Some of the answers that you're looking at such that you are able to make this decision to join our UGX fund?
Okay, so I am a fairly informed and quote-unquote sophisticated investor because of my financial knowledge and also the different things that I've been able to do. So I would start off by asking to understand the profile of your different products. And secondly, I would want to know where those investments are going to be made. So you talk about your bonds, unit trusts, treasury bonds, treasury bills, you name it, dollar denominated, UGX. And that is something that I would be very interested in. And then the next question would be on the return. So as I said earlier on, I would want to diversify. So, 15-16% return on Uganda treasury bills, very, very exciting. But likewise, to preserve hard currency, I'm prepared to consider 3-4%, 5%, wherever that could be earned in hard currency, whether it's local or elsewhere. I would want complete transparency in terms of your fees and charges, because very often investment advisors are very quick to talk about returns and what you can make and whatever, but I understand finance, so I want to know how much you're charging. I would challenge you to tell me whether whatever it is that you're saying you're going to do for me, I can't do it for myself. And I know you have access to, collective investment schemes and corporate bonds that I cannot just walk in and make a call and invest in. And I would then share with you my demands and needs in terms of the financial. So personal in terms of liquidity, school fees and tuition fees, then medical and health and wellness, and my social spend, so that then you come on board as a partner, not just somebody who is doing a transaction to earn a commission and leave me to sort out myself. So to maybe even prepare you for the conversation we're going to have, I would expect you also to do some research on me so that, there's so many years ago, about 5 years ago, I used to get a call from a bank asking me whether I wanted a salary loan. And the call was coming from what they call DSR, direct sales reps. So they get names, then they get telephone numbers. And this lady, very young lady, she didn't know me. She had never heard of me. And she was talking to me about a salary loan. And I told him, actually, I'm the one who pays salaries. And I went to see her. And then eventually I got a consultancy with a bank to train them and teach them about KYC and how they need to know clients and then profile them. And since then, that bank has a very good portfolio of what they call HNI, high net worth individuals or something like that. So I wouldn't expect to come to you and you talk to me about things that I've done 20 years ago. Am I?
Yeah, I think
Yes, Philip. God.
That's quite a bit. I think for us, it's something to think about for everybody in this room, that we need to do our homework on the different persons that come to ourselves.
Very true, yeah.
Yeah, just so that we are able to profile them.
And have a meaningful conversation.
Yeah,
otherwise, you can easily end up being very transactional and you just get my 1 billion.
Yes.
Instead of actually getting the entire portfolio of my investment club.
Correct. Yeah. But I also like what you mentioned, that some of the things that you're looking out for are the fees that we charge on the particular investments. You're looking at where are we investing this money. I think that's very key for ourselves. But just to go back to the previous question that I had asked and to knock on liquidity, really. Yeah. You've mentioned a lot of things. You've mentioned the multi-currency card. You've mentioned the fact that you need liquidity. You've mentioned the obligations that you currently have in terms of paying school fees. And I just want to expound a little bit on that. and understand from your perspective what part your portfolio personally and from your experience, what part has it played in ensuring that you are able to successfully meet your obligations during this particular course or section of life that you're in?
Okay, that's a good question. And this Chatham House rules, I'm among friends, so I'm going to share a lot because I think it's really important that I share and put this into life, and then people can reflect on what they may wish to do. Sure. And how they can partner with I&M Capital to make them realize their financial plans. So we, Ugandans and people of my generation, we invest at times and acquire things for sentimental reasons. At times we are challenged by our elders. You have not done anything in the village, and how can you have 4 blocks of apartments in Kiwatule and Najera and Bugolobi, but you've not built a house in Iganga or Uganda or Kalisizo, and then you end up doing those things. But you have 2 children, and the children are going to Green Hill Academy, and the team from Green Hill is here. From there, they go to Bristol University or Kent or Harvard or wherever it is, even Strathmore, Makerere. But you are investing them in a manner that just shows their future is not in going to go back and look after the cows or cattle in Ibanda or coffee in Kalisizo. And you then end up in a situation where you have so many assets, fixed assets, that are not income generating. You can sit in a place like this and share with your friends how many land titles you have, but they're not income generating. You may even photograph the titles and have them on your phone, and you swipe and show them the acreage and the allocations, but actually they're not generating income. And I decided to declutter and got rid of all that stuff. I stayed with about 3 assets and put my money in money markets. And then did it in such a way that my children are going to, whether it's talk about wealth transfer or inheritance, I'm very, very realistic that even if I gave her, I've got 4 daughters, even if I gave her a title of 40 acres of land in Masaka where my coffee is, she might sell it on the phone. So I then put money into a product even that she understands. So you could buy a bond in Sainsbury's. There are USD and pound bonds paying 4.75%, 5.2%. So somebody who's studying in University of Kent who shops at Sainsbury's, to tell her that I'm an investor in Sainsbury's, she can relate with that, but it's not her money yet, but it is money seated somewhere, managed by I&M Capital, and it is generating passive income, which goes to meet her day-to-day expenses, whether it is, because it's not big enough to pay the tuition fees, but that money is there. And because that money is there, you start then talking to her about what you've done as a person and also educating her in terms of savings. I was very fortunate that I learned saving at a very early age. And I was 26 years, I attended a course. I was a student in the UK, and I asked a gentleman, when should I start saving? And he told me, it should have been yesterday, but if you haven't started yet, start today. I said, great. Then the next question is, how much should I save? Then he asked me, what are you saving for? I said, okay. I didn't know what I was saving for. I was 26 years. I was still very young, and I wanted to enjoy my money. Then he said, okay, a simple formula, get your age. And this is where people get their calculators and pens and paper. Get your age, divide it by 2, you get a number. I was 26, divide by 2, you get 13. And 13 is the percentage of your net take-home pay you should aim to save on a monthly basis. And Philip, that sounds big, but let me tell you, it's already happening. If you are in formal regular employment in Uganda here, 15% already goes to NSSF on a monthly basis. So if you are 30 and below, you are ahead of that formula already. But if you are 45, it's possible that you can actually save an additional 5% over the 15% that is already happening. Because if you do that, and there are lots of people here, let me speak about the I&M Bank people who can afford to save $1 million shillings a month based on how much I know we pay them. Save $1 million shillings a month for 20 years at a compound interest rate of 12%. Lately, NSSF pays up to about 12 or 13. For 20 years, you'll have $1 billion shillings. Philip, $1 billion shillings in 20 years. You 35 years, you commit to save $1 million shillings every month for the next 20 years. By the time, you won't even be my age. By the time you're 55, which is my age 5 years ago, or 6 years, 4 years ago, you'll have $1 billion shillings. And you then get into the phase of life I'm in, how to preserve it, how to make it work for you, and your money works when you're enjoying life.
Yeah. Wow. I don't know about getting that money before your age. I'm also quite old, Francis. But
then you just increase on the percentage.
On the percentage.
Yes.
But so I was just wondering which course is that, so that for the young professionals in the room, we can subscribe to this course that changed the course of your financial future.
So the course is this. When you earn, spend less so that you save. How do you get to spend less? Desire less. How get to desire less? Less social comparison. And know you're enough. Run your own race. And don't worry about Francis driving an S-Class 450 grand edition, because that is something that has happened after working for 30 years and saving for 30 plus years. So there's no course where you're going to go to university. You know how much you earn. You know how much you spend. You can just make the odd change here and there. And if you cannot keep that money yourself, speak to Philip. And he puts it into a product. There's visibility, there's transparency. Instead of showing land titles on your smartphone, show the bank statement, the income statement, the treasury statement, showing that you actually have invested in Capital One, PLC, it's one of those big, or Amazon, or you name it. And some of those organizations are going to be here for quite some time. Products are tradable. The fixed income is paid on a regular basis. But most importantly, it is also transferable, especially to the younger generation. So don't waste time going to a course. Just change your spending habits. And I'm quite happy to have a one-on-one on that one, just to share experience, if anybody's interested.
Thank you very much, Francis. Thank you for that. So you mentioned doing homework on the prospective people that you're going to be speaking to, just so that you can have a relevant conversation. And Francis, I must say that I did my homework on you just before we were scheduled for this particular Fireside Chat. And I think you've also spilled a little bit about what I wanted to drive into, which is investing outside the country. You've dropped names such as Amazon. You've dropped international companies that we very well know within this room. And I just wanted to get your opinion on the particular role that those investments have for you. Those investments are particularly in hard currency, usually in the United States dollars. So what has that played for you, and why should any of the persons within the room, the entrepreneurs, the investors within the room, be looking at such investments?
Okay, what they've done for me is to give me access to markets that I would not have had just doing things myself. Two, we are very highly educated, informed. We read, we see things on TV, you see things on social media, but at times we don't take time out just to ask, how are people making money out there? And very, very few people make the money from real estate. In fact, those who make money from real estate make a lot of money, because not everybody owns real estate in those parts of the world. And then you find a few people who are owning it and everybody else is renting from them. But most importantly, it is through tradable instruments, shares and bonds, and investments of that kind. So what I like with I&M Capital, and I'm really, really happy that I&M Capital is here, because I've been one of those people who have been asking for it because I do a lot of my investments through Bank One, which is our sister company in Mauritius. And the wealthy individuals in our country need to be educated about the need to diversify, both from a product perspective, currency perspective, and also market perspective, so that everything that you've worked for and has saved for the years is not just in one basket. Two, they also need to start looking beyond their time and think about wealth transfer to the next generation, and be very, very realistic that our millennials and Gen Zs are not going to be very excited about, coming and taking over our warehouse selling cement and iron bars, which a good friend of mine has made a lot of money in that business and sent the children to Bristol University. I think she wanted her to come back and sell cement, and I told her she would not. And please don't even talk to her about that. She'll be very depressed because you sent her there for a reason. And then she says, but what are all these things for? I said, they are your things, they're not hers. But ask her what she wants, and then I can guide you on how you can take care of her, so that also she starts something of her own. So we need to have some really tough conversations with senior people who are wealthy, but it's very clear that wealth might not be transferred to the next generation the way it is structured, and also protect the younger generation and prepare them for that wealth transfer by ensuring that that wealth is in a manner in which it can be transferred to them, and they make meaningful use of it. So diversify, speak to professionals like yourself, and be open. When you go to a doctor, you tell them everything, because unless you tell them everything, they won't know what the problem is. When you go to a lawyer, you tell them everything, and then they decide how to use the law to support you and protect you. Likewise, when I come to you, you know a bit about me, but I'll tell you a lot more, and then I will challenge you in terms of what more you can do for me and what you can do for me differently, which already I'm not doing. And I'm very, very open to new ideas. So very, very exciting time for I&M Capital in this market. But most importantly, invest. Don't spread yourself so thin. A very target audience of people who really want to preserve their wealth, want their money to make money for them while they're doing other things, but most importantly, want to have access to their money and also want to be able to transfer that money to the next generation. And you'll get very good clients. And the beauty with that group of people is that when you do something for them, those bagaga, they recommend other people, and then they get into a space where it's not about driving Range Rovers, but it's where you're investing your money. And somebody turns up to those social events of theirs and says, oh, I've got money in Amazon and Nvidia and Sainsbury's and Santander. They say, well, nobody talks about pine and has avocado anymore as a result of that, because the conversation has changed completely.
Right. So I just want to make this a little bit practical and get into some of the numbers. I know you're a numbers person. You've been with PwC for 27 years, if I'm not wrong. So I just wanted to give an illustration, and maybe you could share with us, based off of your experience, an illustration of an investment of 100,000 that is made within the market. You have quite a bit of experience investing in the corporate bond market, and this is part of the research that I found out around you.
Yes.
What does an investment of, say, for example, 100,000 within the offshore market or outside Uganda at a rate of about 5% actually mean for an investor? What are they getting out of it? What are they looking at, basically?
So, Philip, 100,000 currency, please.
My apologies, US dollars.
All right, okay. Otherwise, Salvador might start thinking that. So, 100,000 US dollars. There is, like I said, I'm quite happy to share here. So, there's a bond I did through one of my fund managers, and it pays 5.3%. Yeah, and that's quite high for a USD, but it's a it's AAB in terms of credit rating. And again, when people come to you, we have to explain all those things so that people understand the risk. Bonds are not entirely risk-free, but they are a lot more, they are a lot safer than lots of other things that I've invested in. So 100,000 did it through that fund manager of mine, and it's sitting at somewhere outside of the country. Then I transfer my instructions are that the coupon payments go to my daughter's bank account. And in a way, again, I'm also now teaching her financial management at a very early age. She sees £2,675 on her bank account. Very, very exciting. But I tell her, actually, you told me your rent is 200 pounds a month, and then your upkeep is another 175. So you make sure that that money lasts you a whole year. And suddenly she has so much pressure because this money is available. She can see it, but she cannot spend it. And then I monitor it remotely, all these gizmos and tech that we have. But in a way, I have peace of mind in the sense that I've got 100,000, which if I decided to liquidate, I just make one call and I'll have that money and utilize it. Secondly, that money is always there because it's being preserved. It's the capital and it's not what we're spending. But thirdly, it's generating passive income to somebody who benefits from it, and also suddenly learning to manage money without having to worry whether I've sold coffee or not. And that's the way I've dealt with it. And it gives you peace of mind. Also, it gives you some meaningful conversation now to have with the children. Because when they are not with you anymore, they are following people on Instagram and you cannot have that conversation. They are doing things. But now when you talk about money and investments and whatever, and they are into the thing, it becomes a totally different conversation. And then they can ask you, oh, how did you do this? How come, when did you earn it? So how much more money do you have and who else have you done it for? I say, you leave those ones for me. This is the one for you, and focus on what has been allocated to you. So that's what I've done, Philip. And that's a real life personal example and experience.
Yes. I noticed that you mentioned peace of mind, to paraphrase financial security, all of which have been brought about by the investments that you have made over time. And I also wanted to expound a little bit on that.
Yes.
This current season that you're in, having had the illustrious career that you have had, and now you're in this season where you are a farmer, if I'm correct.
That's correct.
Published author too.
Very true.
Quite a lot of needs. And I want to go back to the issue of liquidity. And I just want to understand, for the season that you're in, of what importance have you seen this liquidity to be to you? Why is it that you have chosen for your investment portfolio to look the way it looks, having gone out of a couple of investments and come into the money markets? What play are you trying to have there? What are you trying to achieve with this liquidity play, really?
Yeah, okay. So when you use the words liquidity and whatever, as the fund manager and expert, that's your language.
Yes.
Mine is a very simple one. I go back to, say, 30 years ago, even more than 30 years, maybe 35 years ago. And I think of the journey that I started as working. And then I ask the people who are still in that space, why do you work? Now, when you ask yourself, why do you work? You cannot just say to earn money and pay bills, because now that leads me to my favorite question and phrase. And then what? And after I've paid bills, then now I can save money for school fees. Excellent. And then what? Then I've paid school fees for my children and this, that. And then you ask yourself, and then what, 5 times? Then suddenly you realize that actually you work so hard so that you may stop working at some point and then enjoy life.
Yes.
Now, how much time do you need to be doing that so that you stop working and then have sufficient money and enjoy life? Because if you continue doing that and you don't know what is your enough, you'll never stop. Because very often you think you're okay until you look through the window and you see something new, more shiner, bigger, faster, whether it's on social media or on the road. And then suddenly you feel very insecure and you go back into the rat race and you are starting all over again. So I got into a phase where I kind of defined what is my enough, and I know what it is. But also, I'm very, very passionate on quite a number of social causes. Education for deaf children, skills training for the youth, supporting causes for Buganda Kingdom. I do a lot of work with our church, Masaka Diocese, Catholic Church. So then that means all your investments and the liquidity and the financing is got a purpose. And it enables you then to do those other things that are important to you without having to worry about, bills and school fees and medical and stuff like that. And some things that you have to get right. Number one, especially for people, I'll be 60 next year. And if you don't have medical insurance yet, before 60, it becomes very, very difficult. So I've stayed in the PwC retirees medical insurance scheme, which is very, very expensive, but you have to be in it because most likely you might need it when you're 72 or 83, but you have to be in it. And to go back to where we started, the life cycle of money you earn, where most of you are now, you save. You should be saving most of what you earn. Spend, of course, you have to spend so that you also have a meaningful life. Then invest. You cannot wait to invest based on how much you've saved. The concept of credit worthiness is you have saved some money and now you are credit worthy, meaning you are worthy of credit. So you have got 20 million, we can lend you 80 million because you've proved to us as a bank that you're somebody we can trust. And then you are able to invest 100. And the final phase where I am is protection or preservation. And I think that's where you really come in because you want to preserve my wealth while at the same time ensuring that it's continuing to generate income. And I'm not looking to make so much more money because I think I've made enough and I know what is enough. But most importantly, I want to preserve what I've made so that I don't then end up not having anything to show for the 35 years of work. Yeah. And I think that gives you a very good problem.
Salvador said I was going to put you on the spot. Can you tell us what that enough number is? Maybe we could borrow a leaf.
It's not a number. It is a mindset. Okay. It is a mindset. Because let's talk about cars, yeah? So I'm a farmer. My farm is in Masaka. My home is in Masaka. The other home is in Kiwatule. I only have one car. So when people see me driving to Masaka, they say, but is that the car you use for farming? I say, no, I don't use this car for farming. It's the car I drive to home. But say you're a farmer, you should have like a double cabin Hilux pickup. We have some of those things at Nissan or Toyota. Yes. And I say, no, why should I have a double cabin pickup? Because that's the car really that you need for a farmer. And then I say, how about this one? Oh, this one is for just cruising in town and, going to corporate events of I&M Bank and, parking it out there and pointing at it. And I say, I only need one car. Yeah? And I buy a car once a year in 8 years. I spend obscene amounts of money because I know where they are and I know what I want. And then I drive it for 8 years. And that's my enough. And somebody then has 4 cars. There's a friend of mine who had 7 cars. He needed them for his business or his lifestyle. But during lockdown, they all parked in his compound. And he said he even never knew that there were that many. He's a very rich guy. Yeah. But then he had certain challenges with loan repayments. And then I went during the lockdown again. He had so much property. So we went under the conversation. He had 7 cars in his compound. He had so many shopping malls in town which were empty, and the banks had given him 6 months. And after 6 months, they asked him, you have to start paying. He came to me to support them and their group to lobby for the government to ask the banks to forgive the debt. Right. And we had to have a very simple conversation about banking. And it's amazing how people are not that knowledgeable about banking, yet they use banks. So basically I explained to them that money that was given to you belongs to somebody else. And in most cases, when you go to the counter, even before you leave, after you've deposited, you see that very same notes that you deposited being given to somebody else. That's how banks work. They're intermediators. So you need now to speak to those people who deposited with the bank to allow the bank to forgive you for the money they gave you, much as you promised that you'll bring it back. He thought I was very cruel and very mean and very insensitive. To cut the long story short, I helped him sell 3 of the properties, paid off the debt, sold 3 cars. I think he's got 4. And he's invested in money markets, and he cannot stop talking about those products of his. And when he travels and tells people that there's a bond he bought in Santander. Santander is one of the biggest banks in Europe. And he saw it and said, I went to my company because he's an investor. And he was so excited.
Yes.
So enough is a mindset, Philip. At times you look at the stuff you have and you wonder whether you really need it. And then you look outside through the window and you see all the poverty and the people who deserve but they don't have. And you ask yourself, are you meant to keep it, or actually you're supposed to be a custodian and a steward through which all these blessings should be passing through your hands to somebody else? So that mindset helps you to free yourself, both financially, run your own race, and do things that are important for you. So I won't tell you how much I spent to buy the car, but you'll see it and you'll give it a price tag. But when you're driving from Masaka, yep, God forbid, even if anything happened, by the time the 19 airbags all, collapse into you, if it was meant to be your day, it happens. If it's not meant to be, you say, thank God to Carl Benz as Mercedes.
Enough is a mindset. It's not a number. I think that's the key thing that I take out of this. But it also resonates very well with financial planning, if you think about it. That in financial planning, ideally, the way that you want to have conversations with investors is using a goal-based approach. Where do you want to land? Where do you want to fall? And where do you want to fall? What is your target? What is your goal? I go back to what you said. You ask yourself why 5 times. Yes. In other spaces, they say that you list down what it is you want to achieve 5 times over. So those are 25 times. Just to make sure that you are sure that this is where you want to land, that it is not something frivolous that has been pushed by society.
True.
Yeah. So right on the money there, Francis.
Yes. Thank you.
But I just want to take a segue into what you mentioned. You mentioned preservation. Yeah. And we've talked quite a bit about that through the investments that you've made over time. But I want to pivot into wealth transfer. You've mentioned your daughter.
Yeah.
You've mentioned the investment that you have where the coupon goes to her account.
Yes.
And she's supposed to deduct rent and also save.
Yes.
As a financial planning lesson. But what arrangements have you made with regards to wealth transfer? What's your experience there? What can you give to the investors, to the entrepreneurs that are in the room around the subject of wealth transfer?
Yeah, so it's a very good question, very, very live, especially in this Uganda of ours and people of our generation. We've worked really, really hard to achieve whatever we've been blessed with. We would not want it to end with us, but there's a risk that it may end with us because for us, we will end. Yeah, there's no question about that, but it shouldn't end when we end. So all the discussions we had earlier on about, asset rich, cash poor, having so many physical assets that are not income generating, but, they are ostentatious and they are things that, you're passionate about. Maybe there is some attachment of some sort to you as a person. Many of us grew up from very poor childhoods. So everything that we'd never had, we have now amassed so much of it, yet we cannot use a lot of it. But interestingly, again, our children are of a different generation. They don't like so much stuff. In fact, they even call your things stuff. Yeah, and you say, but how can you call my things stuff? And they say, but it's your stuff. So to ensure that you have a smooth transfer of wealth, if you're fortunate and you've got them involved in an enterprise at an early age, then that means they're stakeholders and most likely they would want to be part of it. But if their aspirations, ambitions, desires are different, then it's incumbent on you to find a way you reorganize your wealth, whether it is assets, whether it's land, whether it's cows, coffee, you name it, in such a way that some of it can be transferred to them for continuity as part of your legacy. But if you realize that cannot happen, then you have to do something different. And like I said, I'm going to share this as well.
Yes.
First of all, I hope people who haven't bought my book are going to buy it because a lot of this is the book. But I set up a vocational training institute in Masaka. It's not a commercial enterprise, but it's not for, okay, I say it's not for profit in the sense that if it doesn't make profit, I'm not going to, end up not having anything to eat.
True.
But on the other hand, also it's not for making a loss. So I've structured it in such a way that I want it to be self-sustaining. But my number one objective was to provide skills training to the youth, especially after seeing our deaf children, much as we provided primary education, still the opportunities for them were very limited beyond primary school. So that institute is a very well constructed, very nicely built, equipped, licensed enterprise. It currently employs about 42 people. Last year it had 122 learners. It's been going for only 3 years. I know my family, I know their interests, I know their capabilities. Then I also know my extended family as well. So I made a decision to transform part ownership of that institute to Masaka Diocese. And Masaka Diocese is very, very good at education institutions or social enterprises. So people went to Namagunga, St. Mary's Kisubi, Namiriango, Nabingo, all the likes. Those are institutions that have been around for close to 100 years, owned by the diocese. So when I did that, then for me now, I know this institute will continue. And I don't have to worry about my wife and children to do what I'm doing, because what I'm doing, I'm very passionate about it, Philip, but it's not their passion. So it's really important that the people who are, especially the entrepreneurs who have such enterprises, should think about structures of that kind. If they are social enterprises, then it's very easy to partner with faith-based institutions. If they are commercial enterprises and they are well managed, it's very easy to attract private equity. That requires you to be ready to let go of ownership and bring on other partners. But if you want to own it outright, all the years, everything, the truth is, it might not continue after you. And it will be very, very unfortunate for it to end with you. And the children are going to continue just talking about my father or my mother used to have this thing, and it's, it's not our thing. It was never our thing. And I wish he had used it also to support us to do our own thing. So as you speak to the, wealthy people, clients of yours, the conversation should be broader, because then that will inform them to maybe liquidate some of those passive non-income generating assets so that they put the money in I&M Capital and generate income for their interest and causes, while at the same time ensuring that there is something to pass on to the younger next generation. That's what I've done, and I strongly recommend it. You have to be ready to let go.
Yes.
Yes.
Yes. You're not going away with anything. Yeah. Francis, thank you very much for sharing that, most especially because you are sharing personal experiences firsthand, not just theory. It's actually something that is live to you. I can see Salvador prompting me for time, but just before we leave, and I've really enjoyed this conversation, just before you leave, I just want you to put yourself in a scenario. If you had some wealth and you wanted to invest it, you had some money, you had some savings, to use the word that we used at the beginning, and you are looking to invest this money, and you are looking to invest this money with I&M Capital.
Yes.
What are some of the things, what are some of the answers you'd want to get from I&M Capital as an organization before you can entrust them with this money that you've accumulated over time?
Okay, one, governance, that goes without saying by virtue of you being regulated and licensed, but it's really important that you know that is a given, but but I would ask it. I have lost money doing other things, and at times, as they say, if the story is too good to be true, usually it is too good to be true. so I lost some big money, doing things with some friends of mine. But before we lost it, we made some really good money as well. So
usually that's the case.
Exactly, yes. So you have to be very clear about your risk appetite, and that's why the portfolio diversification is very, very important. So one, the governance is important because I'm entrusting you with my wealth. Two, and I talked about it earlier on, to understand the different products and services that you are going to be investing in on my behalf. Three, transparency around charges, very, very important, so that there are no surprises. And I also want you to be, my partner on my journey, because as I bring my billion or 100,000, show an interest in me as well. Why am I investing? What is my current lifestyle demands in terms of income obligations? And much as you may be very, very excited to take the entire portfolio, maybe also be candid and honest enough to tell me that, maybe you may want to put some 10,000 or so, or $5,000 in life insurance or medical insurance, because you at this age and whatever, God forbid, if you have any problem, yes, we can sell the bond and give you the cash to go to Turkey or Thailand for whatever. But I think you really want something with a reputable insurance that GA is here. I'm a director in Old Mutual, and we have some really, really interesting products for people of my kind, both in terms of profile, health, wellness, and we've done this, and most insurance, these wearables, a lot of the insurance companies now use that data to even give you some really good products in terms of your life insurance. And then, don't make it just a one-off, I gave you money, you invested it, and there's no ongoing communication and conversation. And I don't want you to get into my life and come into my space. But I also likewise want you to tell me when things are happening out there. If I came and invested and you put it somewhere paying me 3.75%, then something new comes on the market paying 5.2, my risk profile, share with me that product and let's have a conversation. And, we run a spreadsheet, I'll sell it, liquidate it. These are the costs, but I'm happy to sell at a loss so that I invest in this new product, and I'm a long-term investor. And that long-term relationship, because I'm building wealth, I'm preserving wealth, and you are my partner, as opposed to somebody who just took my money and did your things and your fees and don't want to talk to me anymore until there's something new. So show interest in me, while at the same time respecting the boundaries, because I may be your client, it doesn't mean I want to be your friend.
Very interesting way to end that question. Ladies and gentlemen, we have come to the end of our fireside conversation with Francis. I hope this conversation has been one that has helped you get some insight, given the journey that he has shared, his financial journey that he has shared. And I hope that we all have something to look and think about, that wealth management is not purely just selling investment products. But what we are trying to do is make sure that within the different sections, times of your lives, that you have achieved financial independence in each and every one of them. Ladies and gentlemen, please join me in thanking Mr. Francis Kamulegeya for his time.